Weekly market outlook, guys. Welcome back on a Sunday. We are trading today, 18th of May. Cryptos are holding off tight at previous levels in a way. They might move higher, medium term, short term. Any correction in the making? That's what we're going to discuss. What the US dollar is going to give us, and somehow further motivation, of course, in regards to equity markets, as previously we've just seen that the equity markets were somewhat starting to move maybe slightly lower. With that, we are back in our call here, and guys, let's check out what's happening currently. Let's face the current market motivation. Equity investors are potentially a bit threatened to buy markets further to higher price levels. We've seen the S&P 500 though rising, and that looks kind of quite interesting as these current levels and the market motivation has slowed somewhat. But there's still upside momentum in the making. Only a break of the recent lows might actually kind of indicate that the market is going down, and we are here on the daily chart back towards the 50 moving average, which in itself might act as a nice supportive area somehow where the market had previously just kind of been well supported, right? We look at this market sentiment here. There was quite a bit of support turning to resistance. So now if the market corrects, downside momentum might be limited in this market. In general, though, and that's the interesting part of the current outlook here, the US dollar has changed somewhat its direction, slightly at least, right? When looking at pairs, the euro dollar, or as well vice versa, the other pairs like the Aussie, as well as obviously kind of the pound against the US dollar, they have moved into interesting territory, right? So right now, euro dollar, as we anticipated, did exactly. We sold, right? Really with this pin bar candlestick pattern telling us the market might be at a strong resistance moving lower. That's exactly what we did. So our subscribers made some bucks on that alone. The recent resistance here now turning to support might be interesting, or will we move even lower towards the next area basically and face further downside motivation. This fresh week, the upcoming week starting tomorrow, might give us some important information here in this market. How's the other currency pairs doing? Let me check out the pound US dollar, because the pound in itself has really moved quite interesting actually towards lower levels as well. However, it's kind of trading in a way steady, right? Below the 50 moving average, above the 50 moving average, that's this one here, but below the double top formation, this important zone we can see here on the chart might tell us that the market sentiment is about to weaken somehow further. But we got important news events brewing, and the question might be, will we see a further fresh weakness in the greenback? And that's exactly what the news events coming up this fresh week starting tomorrow. We got PMI data from various countries, right? France, basically, flash PMI, better than expected, is at least what we should see, better than the previous figure as well. And the German figure as well could kind of gear up a bit of a boost, right? Recent rate cuts might support PMI data. Plus the big story, the war in the Ukraine. Is there going to be a truce at least happening? Well, the recent talks initiated by Vladimir Putin, where he himself didn't attend in Turkey, stopped after like an hour and a half. Some rather, as we understand, lower level diplomats were obviously talking, and the idea so far, as we understand, that 1,000 prisoners of war are being exchanged between the Ukraine and Russia. That's the only thing happening at the moment, but people for the first time in 3 years were sitting at a table. So let's stay hopeful, and let's see how this might actually influence markets this upcoming week. Let's move back towards the charts and check out how the market sentiment might be. The gold price could be something interesting to observe. Gold has started previously 50 moving average, daily chart. Gold has started to appreciate, and we might say, okay, let's see if the upside can continue basically, and if this trend line here, market weakening, 50 moving average here, the market stopped on Thursday. On Friday, it went lower once, but starting to appreciate. So any breakout above the high point here, entry price could be right on top of this current week's pin bar candlestick, which, by the way, is sitting at 3,240, 3,245. Any potential movement to higher levels might be used by traders, by investors alike, to kind of push this market back to the upside again. So the upside motivation looking kind of quite fruitful, and so far we can maybe see that motivation here in this market back to higher levels might be the outcome in regards to gold. A rising gold price, what is this gonna tell us? First of all, that maybe the fear in markets might kind of flare up again. Maybe we see that this Ukraine war situation with Russia is not gonna give us any potential security, any potential safety whatsoever. So this might mean as well, there might be some underlying factors what could support the gold price. And now we hear that Israel is just starting another offensive, another approach in the Gaza Strip, so more dying, more suffering happening, and obviously kind of with the idea, as Israel's army chief at least claims, to get back their remaining people, which are still seemingly missing in Gaza. So that might be something which is supporting gold prices rising higher, and we might see that this is going to be the case as well. Plus, the dollar weakness might be the question. As I said, the euro, interesting levels at the moment, the pound similarly. However, if we're looking at the Australian dollar, it gives us something important as well in this case. The Aussie is a bit of a preview or a reflection of equities, of stock markets. If stock markets weaken, typically the Australian dollar weakens as well. And that's exactly levels or happening currently at levels which are important to observe. If the market can break this 50 moving average, which is a nice resistance zone here, but also this pin bar, this technical candlestick pattern points to further weakness in this market. Any weaker price levels of these resistance zones are the ones which could drive those markets back to the downside. Might translate in this case Australian dollar weakness plus gold prices rising. Similar story. Aussie weakness could be a reason, with the US dollar being kind of stronger, the US dollar stronger, pulling the Australian dollar back to the downside, being one of the ideas here behind this market. But we shall talk about news events as well. And one news event, which is coming up on Tuesday already, is the interest rate decision out of Australia. Expected with a 25 basis point rate cut. The cash rate in Australia is expected to basically be lowered. If a lower cash rate is happening, this might translate to the Australian dollar weakening. Now, this is going to be expected, so it's priced into markets. However, any wordings, any new adjustments in, or any adjustments in the rate statement might still cause the market to turn weaker. With the dollar strength, there might be some reason here behind this motivation of the market sentiment turning weaker. And now we can see that here at these technical resistance areas, weekly chart. Now this current week, which is about to end right now, the market strengthened initially, weakened further, and this might give us further room to believe that the market is going to push lower. Last but not least, in this case, a break below the 64 area, some psychological support zone where we have the red trend line here, 63.60 thereabout, might cause the market weakness to continue, causing potentially some risk of sentiment as well. What's the risk of sentiment? As we said, risk of sentiment, traders are kind of doing some profit taking, basically reducing some positions or taking profits in equity markets. They might buy into gold, which is why the gold price might rise off this important current support level. Daily chart, 50 moving average, we just explained this one, and the Australian dollar might weaken. So we have an array of data coming out this next week, starting tomorrow, plus the economic data, which could support market motivation basically here to call for a weaker Australian dollar, and hence obviously causing the market motivation to weaken somehow further. And then now we look back towards the Australian dollar's reflection here in the S&P 500 longer term weekly chart. We are at somewhat a technical resistance zone, we could say. And if you're not sure, just drop yourself a motivational chart here in terms of a line chart. Resistance here, we see the spike to the upside, we see the bend to the downside, might act as a strong resistance level when looking at it at exactly what level? 6,000, 6,000, psychological number, right? It's a round number, and this might be something which in itself could create a bit of a lower high, because we had a higher high with the all-time high up here, and the market motivation just at this level might just tell us there might be some temporary end here, and the market weakness might kind of get some sort of, with any sort of catalyst, some weaker price readings here to basically continue. So stay tuned for this one in the S&P 500. The NASDAQ somewhat exactly at similar levels here. The markets also kind of might stop at a bit of a lower high point here, potentially indicating some weakness to continue. The NASDAQ's motivation might be something similar we could see here in the next couple of trading days. Financial Times is talking about Nvidia as well here, and what they are trying to do in terms of the big bang maybe. So what is going to happen with a huge tech industry in the US? They still remain strong, and they remain at extremely cash rich, so have a ton of money to potentially spend, not only for stocks but to buy them back. What they quite often do is that they buy back their own shares in order to support the market, as they use their own capital to kind of support their own corporation, their own company. Nvidia, and the big story, which is still one of the headlines here, what's happening actually with the trade war, the US and China. The Chinese and Americans were sitting together negotiating some potential trade deals, and there seems to be a bit of a positive outcome, which recently caused equities to strengthen again somewhat. But China is maybe in a slightly better position in regards to rare earth, comparing it to the US at least, and that might be something worth a consideration here. What if China continues to kind of export less rare earth for the global economy, especially the AI technology chip manufacturing sector? There might be a shortage, which might be something which causes the market sentiment to basically weaken as a whole. Because one thing is for sure, after our recent, say, flash crash a couple of weeks ago in the equity sector, we saw a strong recovery here in markets, and this looks extremely positive, but valuations remain high. For that and more, by the way, guys, I'm going to have Mirko back in and at our microphone next week. We're going to talk about markets again, because I know that you guys miss our equity talk. Mr. Dividend, the smart investor, trading the markets, actually not, but investing in the equity side of things. It's a great complementation. So for the guys of us in our forex chat as well, we talk a fair bit as well about equity markets. So if you want to invest long term, which is the beauty of using leverage, which any brokerage company you might use, you can invest long term and still use your capital for short term trading without bothering much about too little capital in your account, too little collateral in this case. The silver market is somehow a bit differently behaving, because silver looking actually rather slightly better. And looking at it from this perspective here, the market's tendency here, potentially at least, the tendency in, I should share my screen again, the silver market here, it might break above the high point, and any break above this area here might indicate the market is going to strengthen somehow further. This beautiful, and that's a mother of a pin bar candlestick, basically a small body on the upside, a long wick to the downside, might indicate that the market is going to strengthen somehow further, pushing itself back to higher levels medium term. This could be extremely positive. If dollar remains weak, this trend might continue. That's off the long-term chart. We are now trading about mid, slightly towards the end of May. Any push to higher levels, or say at least any sideways pattern, might indicate a buy stop above the high, might still be a fruitful strategy for this longer term market. So stay tuned on that one. Our subscribers obviously will get a couple of updates here in markets to see how the market motivation goes and how potentially the equity market, similarly to the precious metals market, will go. By the way, guys, I nearly finished editing the video, Jim Rogers, so stay tuned for the interview. It's going to be released in the next couple of trading days as well. Let's talk about crypto markets. Bitcoin has been rising again, and it's now in a super duper cool waiting pattern. If we see that the NASDAQ and other US stocks will continue to perform well, then Bitcoin, Ripple, Ethereum, whatnot, all the coins, not only Bitcoin as the mother, but all the altcoins might follow, causing a lot of upswing in markets. So stay tuned on that one. We like the current outlook here. We are trading on Sunday. And let me delete this little circle here. You can see it's a bit of a waiting pattern. Any kind of bullish candlestick pattern, maybe a slight retracement even on Monday, might call for the markets to strengthen. Maybe we see then something even positive towards the 120, 125, 130,000 US dollar level would be something extremely positive. The Bitcoin market at least would lead market sentiment in general and could push the overall sentiment, the overall market momentum towards higher levels. Ethereum, ETH is kind of printing some corrective pattern. We wouldn't wonder if any slight correction might happen again. Any entry opportunities might arise, hence, obviously. So like support, market weakness could drive this market back to higher levels. Ethereum and XRP, Ripple, they're looking cool as well. I haven't been a big supporter and friend fairly recently, as I expected quite a while ago, 3 months ago, that the market weakens further. However, maybe actually any appreciation might happen rather soon. Why that? If we see any ETFs going to be approved in the US, this could drive the demand because global investors, hedge funds, whatnot, reportable or the traders, investors who need to report their positions could do that while trading it via an ETF. So that could be something which is still why it's supportive to this XRP token, which looks like potentially moving even higher. And I might say, okay, who has been in the last couple of years one of the stronger crypto tokens? For sure, Bitcoin, but one of the next following places is definitely XRP among a few other tokens, because the altcoin market has been extremely tricky. So the market was somehow rising, but giving back to the last or within the last 5 years quite a bit. Most of the altcoins have actually not moved to higher levels. Instead, medium term, they had gone higher, but corrected subsequently quite sharp. So check out yourself going to, or by potentially going to CoinMarketCap, you can see all those details. And XRP is one of the only ones, on the only few ones which has moved higher. Looking at Solana, by the way, as well, we can see the market is still trading well below the all-time high here. However, Solana also looking kind of still quite nice so far. Any sideways pattern, any slight corrective pattern, as I said, Bitcoin looking good, waiting for a breakout. Ethereum, XRP, Solana, they all might just remain in a sideways pattern, first of all, before the breakout is potentially gonna happen. What's up with the FX market? Looking at the dollar against the Japanese yen, because this currency pair has been extremely interesting. We traded it nicely. We had our real cool trade. We bought the euro dollar, we bought the pound US, we bought the Aussie US, and what we did is we actually, sold, obviously, that's what I meant. We sold all the aforementioned 3 currency pairs, and now the dollar against the Japanese yen was nicely performing. Our idea here, bottoming out, and this last week we had our trade nicely up and running, and we closed the majority of this trade up here. That was our initial profit target, and the remaining position was then kind of stopped out at our stop loss slightly lower. So also that one, we created, I think, about 150, 200 pips to the upside in the dollar against the Japanese yen. Now, this market might indeed kind of start to depreciate again. Will the US dollar, the greenback, weaken further? The Japanese yen might actually strengthen, causing this currency pair to push back to lower price levels, as we can see here. And the same is true for the other markets when looking at the pound against the Japanese yen, for example. Beautiful pin bar candlestick pattern. Where at? Right at this 50 moving average. So that could give this market quite some advantage to call for some further weakness here. So the weekly chart looking kind of quite interesting here. Pound JPY potentially lower, and the Euro JPY, similar story, giving us a seemingly similar trading opportunity here, with further downside motivation is just gonna weaken somewhat. So that's our outlook for this next upcoming week. I think we talked about all the markets apart from one thing which I forgot, and that's the oil market. We mentioned it early on. Oil is in between zones, and the oil price might still kind of be impacted. Obviously, Ukraine war, maybe not too much, but the story in the Middle East, the Arabian League had met up, and they kind of really shunned the Israel government. Obviously, different opposing views in this case, but this might still impact the oil market quite a bit. Longer term trend wise, the market looks extremely bearish, and looking here to trade below this kind of rising trend line, in a way below this 50 moving average. And last that's the monthly chart, last month bearish, now we've gone slightly higher. I still remain with my similar views here from the last couple of trading weeks in the past, that this gray zone, once we've entered this, it's a technical vacuum. We have not traded for quite a long time in this sideways zone here, and any break in or below this zone might actually open up the room towards the next levels, because simply there might not be many orders, right? So markets move in a sideways pattern when there's a ton of buying orders at lower levels, and the markets start to appreciate. But when there's no orders, and based on what we see in the past, there have been no orders here. It was like a dead end, right? A dead zone here. This might cause this market to just simply start to depreciate even further. And with that, we might expect that the market could quickly fall towards a lower price level, kind of threatening the further outlook here in a positive way. Not quite. It looks like extremely that the market, once starting to depreciate, downside momentum might occur. Guys, on that nutshell, I like to release you here for now. Leave your comments below the video. Don't forget to subscribe to our channel. And again, stay tuned for Jim Rogers in the next couple of trading days. Have a good one trading. See you then. Take care and happy trading week. Ciao, ciao.